Good afternoon, and welcome to today's webinar, Demystifying the Small Business Administration's Economic Injury Disaster Loans. This webinar is produced by the National Cooperative Business Association. With over 600 attendees, we are very proud to bring you this critical information during this public health crisis. For more information and resources, please visit our microsite at ncba-clusa.coop/COVID-19-resources. Once again, that's ncba-clusa.coop/COVID-19-resources. Today's webinar is scheduled for 1 hour and will address emerging questions surrounding cooperative business access to the funds made available in the Emergency Relief Bill. But before we begin, I will just mention a few housekeeping items. Participant phone lines will be muted during this presentation to reduce background noise. There will be a chance to pose a question, just not verbally. If you have a question, please type it into the question box in the GoToWebinar control panel on your screen. Questions will be collected and answered as time allows throughout the program. NCBA CLUSA will be recording this program and will be archived on our website. You'll receive an email containing a link to the posted recording in just a couple days. Now, with that said, I'll turn the webinar over to our moderator, NCBA CLUSA President and CEO, Doug OBrien. Doug?
Good afternoon, everyone. This is Doug OBrien. I'm the President and CEO of National Cooperative Business Association, CLUSA International. I want to thank everybody for taking time for this special webinar on providing technical assistance and advice on how to apply for SBA's economic injury disaster loans. Just a quick word about NCBA CLUSA. We, of course, are the umbrella association for all co-ops here in the United States of America. And we have been working overtime, have so many, to make sure that cooperatives are able to weather this public health and economic crisis we all find ourselves in today. Before we start, I just want to give a particular call out to those members of cooperatives and the staff of cooperatives who are really on the front lines. Those folks in the food sector, at the food co-ops, the ag co-ops, those folks at the rural electric utilities, and in credit unions, community credit unions, and others, people who are still working every day to make sure that their members and their customers can access critical goods and services and putting their own health on the line. Just need to call out and thank them for their work. Today, at NCBA CLUSA, we kind of do four things. We do public awareness, we do development work, we do thought leadership, and we do advocacy. And the advocacy work in this last 3 or 4 weeks has been laser focused on making sure that all co-ops have access to and understand federal programs that are starting to come down to help small businesses and individuals deal with the ramifications of COVID-19 to their household and to their cooperatives. So just a couple quick kind of ground rules here today. This webinar is designed to help cooperative businesses apply for economic injury disaster loans. And while there may be generally useful information for other types of businesses, I'm sure there will be, we will focus on how co-ops should complete the application, some of the basic questions that co-ops would have as they approach this. Really, for almost all co-ops, this is certainly a novel experience for them. Viewers and the audience, you may type your question into the chat box, and then I, as a moderator, I'll field those questions. We have some staff who are making sure to surface some of the ones that are probably most impactful across the board. Just the last couple things I want to say is I want to thank David Hincapie, who we'll talk to in just a minute, who is with the SBA out of the Washington, D.C. regional office. David's been just fantastic as very accessible to the cooperative community and helping to answer questions and navigate SBA's landscape, not only in the situation we find ourselves in with COVID-19, but for the last couple of years. So I just really want to appreciate David's time, and you can imagine just how busy they are. SBA, along with other entities, government entities, has been asked to do some really monumental things with this most recent legislation. And so I just really want to thank them and all the public servants there for standing up for small businesses, for cooperatives, and for their communities. I want to hand this over to Kate LaTour, who is the Director of Government Relations at NCBA CLUSA, to make just a couple comments providing some of the legislative context for the Economic Injury Disaster Loan Program. And then Kate will hand it over to David. So Kate, could you please make a few comments?
Sure, thank you so much. Like we mentioned, Congress has been busy, and phase 3 of the federal response to COVID-19 was just passed recently. That's called the CARES Act, and that provided $10 billion for the Economic Injury Disaster Loan Program. For the first time, cooperatives are an option on the SBA application form. So this is a really exciting step. And we'd also like to express our thanks to the co-op community who came together to support that work. So on the economic injury disaster loan, some of the conversation has been around both loans and grants. So within the loan application, just to clarify for folks, businesses can request to be considered for a $10,000 grant. Therefore, that does not need to be paid back. So, and the SBA has indicated that these grants are expected to be dispersed within 3 business days. So wanted to provide that bit of context before we get into the application, but then, we'll also be going over that within the application itself. And just because we've received a couple questions already, and I expect we would receive more, but I wanted to also make folks aware that this webinar is focused exclusively on the Economic Injury Disaster Loan Program. We are not answering questions at this time regarding the Paycheck Protection Program, also established through the CARES Act, because SBA has not issued its official guidance. So once they do so, we will be sure to let our members know, and that information will be available on our website. So with that framing, I will turn it over to David Hincapie, who will talk and walk folks through the application process.
Okay, let's see here. All right, here we go. So let me start with the EIDL. Oh, also, Kate, by the way, I can give you some information of the on the PPP if you would like, because we got some information from Treasury and then from our own agency this morning. So the EIDL first, the Economic Injury Disaster Loan is available to any small business that meets the small business size standards. It can be up to $2 million. Cooperatives, all cooperatives under the legislation that was passed this weekend are now eligible for the Economic Injury Disaster Loan. It can be up to $2 million, and it is a loan for 6 months of working capital to help keep the business afloat. So the loan can be used to pay notes payable, accounts payable. It could be used for payroll. It could be used for a mortgage if the business has a mortgage, but not the mortgage of the residence of the business owner or owners. The interest rate is capped at 3.75% for for-profit businesses, and nonprofit businesses or nonprofits are also eligible. Their interest rate is capped at 2.75%, and the nonprofits have no size standard. They can be of any size. We do not require collateral for business loans, for EIDL loans that are under $25,000 or under. In fact, we will not deny a loan for lack of collateral at all. That's not a requirement. It's just that above $25,000 loans, if collateral is available, if real or movable property is available, you must be willing to pledge it as collateral. The terms are up to 30 years. Many of them do go that long. I've seen very few that are under that. That are under 20 years. The first payment is deferred for 12 months. So if you get the loan, if you get the funding on April 30th this year, a month from now, you won't have to make the first payment until April 30th next year. But the interest does accrue during that year, but the first payment is not due for a year. Okay, so we don't have to talk about eligibility because this is all co-ops and you all know you're eligible. How much is the loan going to be? Okay, so we are going to use the financial information that you give us to calculate working capital for 6 months to keep the business open. If the loan is, if our initial calculation is a loan under $300,000, then we finish processing there, make the loan decision, tell you about it, you take the loan, and off you go. If it's going to be more than $300,000, we're going to request a bit more financial information, meaning financial statements from previous 2 years, so we can get an idea of what your working capital needs are. The loan decision is going to take about 30 days, give or take a few days. Under normal circumstances, meaning disasters before this one, it was 18 to 21 days. Now we have so many of these applications, it's going to be about 28 days, 28 to 30 days. And then about another 4 or 5 days to do the funding. So you're looking at from the time you apply to the time you get the money in the checking account, 35 days, right around there. That is why in the recent legislation, there is included in the online application that checkbox that Kate mentioned, which is for a $10,000 advance. Check it, and you're going to get the $10,000 advance. Now, in principle, it's supposed to be 3 days, but there are, I haven't yet had any feedback from anyone who actually got it in 3 days, but I want to warn you of some practical realities regarding that. This is an online application. You're going to put it in, you're going to hit submit, it's going to go into a queue. Then it's going to have to get looked at by someone, and they're going to do the initial check on documents and do we have all the information. Assuming we have all the information, then we continue the processing for the loan decision, but we send out the money, the $10,000 advance. So maybe that's 3 days right there. Maybe it takes 3 days to go from the queue to get in front of a person, but I know right now we have had over 900,000 applications since this all started 2.5 weeks ago, since everybody really started applying for these heavily. So I don't know how long it's going to sit in the queue before somebody looks at it. It might be a day, it might be 2 days, maybe it actually all happens in 3 days. I just want to give you this heads up so you don't get worried if it doesn't happen in exactly 3 days. But it's the intent and is to send it out as quickly as possible so you get the 10,000 right away. And as Kate says, if you get a loan, if we say we offer you a loan, you can take the loan or not take the loan, and you keep the 10,000, you don't have to pay it back. If we decline the loan, you keep the 10,000, you don't have to pay it back. That simple. It's hard to believe, but these are extreme times, I guess. So that is essentially everything I have for the EIDL. Oh, there's the online application. The online application now has when you hit the eligibility options, that's what it looks like right there, eligibility entity verification. The very second one, I believe, includes cooperative. So you check that right there, and then you scroll down in the screen, and then you check a couple of other things, verifying that you are not one of the ineligible entities, because there are some ineligible ones. And you click continue, right? Those are the, right there, review, and then you click continue, and there's the application, right? What you see on your screen right there. Start filling it out and go. Okay, so now here's the thing, here's the rub with co-ops. The application is still, we still don't have a version of it, even online, for co-ops that are going to have more than 5 owners. So what you do is you pick someone in the co-op And maybe you pick 5 people if you want, but you only need a minute, the minimum is 1. You pick 1 to fill out the application, get the information, and then there's an addendum. You can add that in the application and tell them, all right, they're going to know it's a cooperative, and they ought to know that means there's going to be more than one owner, not just the person who filled this out. But they might not know that. There are people in the SBA who don't know a lot about co-ops. So you include the extra information so they know it's a co-op, and I don't yet know what's going to happen when they're reviewing it in the financial information because this is all new. It might be that they look at this, see it's a co-op, somebody figures out, well, there can't be just one owner, there's got to be a whole bunch of other people, and then they get in touch with you somehow and say, tell us about your business. Or it could be they just process it through with that person's name or the 4 or 5 people who put their names in. I'm sorry, I wish it were different. I really do wish it were different. We keep asking them, I keep sending questions up and saying, what about the application? What about the application? Co-ops have more than 5 owners, but they haven't updated that yet. So you finish the application, there's a business owner's information on that screen, you see that there. You finish the application, you submit it, and then you wait for the decision. That is a summary of the process for applying for the EIDLs. And now I guess we should leave it to questions because that'll explain even more about this.
All right, David, thanks so much for that overview. And they're really straightforward. That's the design of this webinar. It's really X's and O's. We've got a number of questions already in that I have before me. I'm going to start asking. I'll just remind people that that there is a spot for you to ask questions in a chat box. Please go ahead and do that. And I'll say right up front, it's likely we will not get through all the questions. We will. We're gonna work to get those answered in different ways, probably using the COVID-19 website that we have, the NCBA CLUSA website. But let's get to the questions for David. The first one I'll raise. Some of these are pretty straightforward. If a cooperative does need to pledge collateral, is that pledge subordinated to existing lenders?
Yes. So we don't even care if we're at 6th or 5th position, on some property. We just need the entity to be willing to pledge what they have.
Okay. Next question is around startups. And that is, we just launched our cooperative, haven't established cash flow, still have money invested at risk, and people. Is a startup viable recipient for a loan?
New businesses are. This is a little different for this than it is for the PPP, which I'll talk about later. New businesses are, but of course, because this is a loan based on cash flow, we're going to have a way of figuring it out, right? So we use the financial information to establish what was cash flow and what were the working capital needs under normal circumstances. So if you only have 1 month of normal circumstances, that's all we're going to be able to do. We'll make an estimate and offer the loan based on that. And I know that's too vague, but I mean, there's just nothing else we can do. We have no other data on which to make an estimate of your 6 months of working capital needs going forward.
Okay, good. All right. Thank you, David. The next question, is there a place on the form for a specific dollar request? And then I think related, how does SBA determine the amount of the loan and the amount of the, quote, up to $10,000, in quote, grant? Okay,
so the $10,000 is just $10,000. Everybody who checks the box and wants it is going to get it. The amount of the loan is based, as I said, on the financial information we get. So let's assume you have more than a month. Let's assume you've been in business since 2015 at least, right? So we have 12 months before the emergency to look at. We're going to look at the financial information you sent us. We're going to see your sales. We're going to see your revenue. We're going to see your costs and expenses. We're going to see your tax return. So we're going to make an estimate. We're going to calculate what your working capital needs are. And we're going to base it on those things that I said you could use the loan for: notes payable, accounts payable, a mortgage, payroll, other fixed debts, etc. You cannot use it. Let me add here, this might come up. You can't use an EIDL to expand the business. If you were planning in June to buy plants, equipment, capital, machines, whatever, you can't use it for that. This is not meant for an expansion, right? And you can't use it to replace profits. In the case of a co-op, you can't use it to replace the distributions that are going to go to the owners. This is for working capital to keep the business open, and that's it.
Okay, good. That's really helpful clarification. This next question is, you know, it's the number of employees, and as you know, David, there's many, if not, you know, the vast majority of our audience today. SBAs have working with SBAs is a new experience with them. So if you could spend just a minute on the basics of how do you define a small business, you know, the number of employees, and then I know that there's some unique things too, but kind of talk about that a little bit.
For most NAICS codes, if you know what that is, it's a North American Industry Classification System. So for most NAICS codes, it's going to be under 500 employees. Some NAICS codes are classified small by revenue, right? But most of them, it's going to be under 500 employees. What was the other part of the question there? So it's how is it classified as small business, and what else?
No, I think that's mostly it. Is the it's by, but for the vast majority of NAICS codes, it is the number of employees that the co-op has, and 500 is typically the number. Okay. Right.
And so it doesn't matter how many owners a co-op has; it's how many employees the co-op has. And so something just occurred to me here with regard to what the loan can be used for, right? It can be used for payroll, but it can't be used for the distributions. I forget what you call it in the co-op world, the distributions. You have a
patronage. Yeah.
The patronage, right? So it can be used for the patronage. Okay, so now let's say you have a sort of small co-op, you got 25 people. And let's say of those 25 people, 10 are also employees. They're being, I don't know if this actually happens, but it occurred to me it might be a scenario, right? So you have 25 members of the co-op, 10 of those members are also paid as employees. So they receive patronage and they receive wages or salaries. You can use it to pay wages and salaries. You can't, the loan, you can't use it to pay the patronage. Now, to prove that you're actually paying these people wages and salaries, of course, we're going to want the documents on that. Are you paying the taxes on it? Is the payroll tax being paid, et cetera, right? So it just occurred to me right now that this could happen in a co-op.
Yeah, good. That's very helpful. Thank you. So next one here, if we have already applied for the EIDL, does the 28 to 30 day period to closing commence, you know, at application, or does that begin to toll after the review of the application?
No, from the moment you apply. And by the way, if you applied before we got the new website up this week and didn't have a chance to check the box for the thing, you're going to get an email asking if you want it. You're going to get a communication. It's an email, I was told. That's what we got in our briefing, that you're going to get an email asking if you want that.
And if you want that, what's that?
I'm sorry, the advance, the 10,000 advance. Because if you applied last week with the workaround website we had last week, you see, the advance is part of the new legislation that happened over the weekend. So if you applied last Wednesday before the legislation was passed, you never got a chance to check the box, yes, we want the $10,000 advance. So we asked about that, and then our Office of Field Operations told us that we're going to send them a message saying, hey, do you want the $10,000 advance?
Okay. All right. Good. Here, I got a real basic one here, but a lot of people will probably be interested in this. Is the application saved as you work on it, or must it all be completed at once?
I was looking at it recently, and I think it said it's about 2 hours. Kate, did you see this? It's about 2 hours to fill it out. So I was talking to someone recently that they saw that notice somewhere on the application, and I didn't see it.
That's what it says on the first page of the application process. When you open the website, that's the kind of indicator that they share.
Right. So it should be saving as you go along, because there's no save button once you're in it. So I assume it's saving whatever when you click next, it saves that page. So whatever page you're on, it's not saved until you click next.
Okay, good, thank you. And this one I think you've addressed, but it's important enough to raise it again, and maybe it's asked in a slightly different way that some people, from their perspective. Does the owner for the application need to be a member of the board of directors, or can it be another member of the cooperative? And maybe I'll just add a third, the general manager, or essentially the executive of the cooperative.
Well, it's whoever's authorized to do this. And Kate mentioned this before we got on, that you would have to, include a note in there saying this is a cooperative and this is the person who's authorized to do this. So right. And in a side conversation,
very recently, it was suggested this would be, to take care of kind of the board governance side of this, having a resolution from the board on file, making clear that individual was authorized to do so would be a good idea, probably. So let's see. Okay, this is a good question, because I don't think we've gone deep into this. Are the economic injury disaster loans funded directly by SBA, or
yes.
do co-ops need to go to a local SBA approved lender? So talk a little bit about that.
These are direct loans from the SBA. The only direct loans the SBA does are the ones for disaster assistance. All our other loan programs are through lenders. So we even do home mortgages for, like if your house is taken away in a flood or something like that. We do home mortgage loans directly. Not a lot of people know that. And unless you're in an area where there's a flood every year or tornadoes or whatever, you're not going to know about these programs. But this is a direct loan from the SBA.
Very good. Okay, great. And this one's, it's come up so many times. I think you've hit on it a couple times, but it is, I'm going to bring it up again here, is the 10,000, is it free and clear, with or without accepting the loan? And could you just talk a little bit more about that 10,000?
So we're calling it an advance. And I think probably for political reasons, if you call it a grant, somebody's head might explode. So we know who that would be. So the advance, that's yours free and clear. If you check on it, you get the advance. We continue processing the application. The loan decision is yes. You don't have to take the loan, and you can keep the advance. The loan decision is no. You can keep the advance. The loan decision is yes, and you take the loan. You can keep the advance. You don't have to pay it back. The loan is separate.
Okay. All right. That's clear. Thank you. A question on how does SBA determine repayment ability as they look at applications?
Cash flow. We want the financial information so we can see what were your sales, what your costs and expenses are. And we're going to see what are your normal working capital needs under normal circumstances before the emergency. In other words, we're not going to judge your cash flow as a business as it is now, right? That's not the whole point is to say, what is your economic injury? Right now, your cash flow, let's say your revenues, your monthly revenues have gone down 40%. That's your economic injury. We are trying to give you a loan so you can cover that economic injury. So we're going to base it under your normal operations, your normal cash flow.
Okay, good. All right, thank you. Another question about subordinate liens and lenders. What if our existing lender does not allow subordinate liens?
Short answer, I'm not sure. I'm going to look into it and get back, but they didn't allow that. Well, one way of looking at it, but I'm going to find out for sure. But one way of looking at it is then you don't have collateral that's available. right? Because the fundamental idea in this is whatever you have available, whatever you can pledge, you're going to have to pledge. Now, if you can't pledge it, then it's not available. But I'll check on that and I'll find out for sure and let you know.
Okay, and then just a reminder for folks when we receive the answer to that question, and there's going to be, some others, I'm sure, we will be posting that information as soon as possible on the NCBA CLUSA COVID-19 website, easily found from our home page. So, a kind of technical application question here. How does one track the status of the application, or is there a way?
Yes, there's a customer service number there, and there's also an email address, customer service, that you can call up or you can email them and get a status on there. You're going to get like an application number, an ID number once you submit it, and use that, track it that way. On the old website, there was a kind of dashboard where you could see messages. I believe that is on the new website as well, but I haven't yet seen what the final screen looks like. So I'll have to find out for sure there. But I do know that the customer service phone number and the customer service email addresses work. I would say that unless you want to be on hold for a long time, the fastest way to get an answer would be to email if you have a question, because somebody's looking at that, they could just type out an answer really quick. If you have a question about anything, you can do it by phone, but I'd say it's faster to do it by email with this caveat. If you email them, make your question specific and clear. If you're referring to something on the application, if you're referring to some technical detail, be specific and as lucid as you could possibly be so that the person who's reading that can answer your question right away. Because otherwise you're going to go back and forth. Well, what do you mean about this? And what do you mean about that? Yeah. So.
Good. Okay. All right. Good. Very, very helpful for potential applicants. Just a quick note from my staff. I'm receiving that we're continuing to get a lot of questions, which is fantastic. Use the chat box. We do want to make sure that people understand that this webinar is focused exclusively on the economic injury disaster loans, and particularly for questions that are pertinent to cooperatives. So, please feel free to send questions in, but these are the questions that we're really going to focus on. We will mention, and it's come up a couple times here, and maybe after we get a few more of the EIDL questions, that we'll be able to, this webinar is not focused on the Paycheck Protection Program. At least, we've been tracking very closely, have not seen formal guidance related to co-ops, which we're very interested in. And we'll be sharing that as soon as we can. David will be able to share some information. He said he did get some information this morning on, we'll see, maybe of a general nature. Just those notes, but let's go back to a few more questions around EIDL. So that, does a cooperative need to prove a loss to be successful in their loan application?
I'm not sure what that means, because I'm not sure what they're asking with this, like what they prove a loss. I mean, we're going to ask for this financial information, and the financial information is going to tell us that your normal operating circumstances, where this is your cash flow and these were your costs and expenses, and we know that these are your continuing costs and expenses. And we're also going to see projections from you for your sales going forward, which you're going to give us and tell us we're not going to sell as much. So that's the loss. The loss is the loss of revenue. The loss is the loss of cash flow in, right? That's all you need to show.
Okay. All right, good. This is can a cooperative return the EIDL loan if the business receives it and ends up deciding that the Paycheck Protection Program might be a more appropriate loan option?
Okay, so I can answer that. I can give you a quick rundown on the PPP, and that'll answer the question.
Yeah, go ahead. Let's take a moment to do that. Thank you.
So the EIDL is for all those uses that I said that I summarized. It's payroll, notes payable, mortgages, accounts payable, other fixed expenses. Great. The PPP is for payroll only. So you can apply to both. The PPP functions a little differently. The EIDL is 30-year term. A lot of them are 30-year term. It's capped at 3.75%. It's not forgiven. You're going to have to pay it back, the whole thing, right? So the PPP, however, has provisions in it so that if you keep your payroll static, you don't change it, right? You don't lay off anyone, you don't fire anyone, you're going to get the loan forgiven. You can have up to 100% of that loan forgiven. So the PPP is designed to give you cash that you can pay to your workers, your employees, who you otherwise could not pay because your revenues are down. So it substitutes the revenues so that you can keep them on the payroll, even if they're not working. That's the whole point. The whole point is you don't have revenue because we're all socially isolating. Nobody's coming in and buying stuff. Nobody's ordering stuff. And also everybody has to stay at home so they can't work. So yes, the loan is used to pay people who are not working, who are at home being socially isolated or whatever, or you just don't have business, anything for them to do because business is down. That's what it's designed to do. So you don't lay them off. Okay, there are some stipulations. You got to keep them on the payroll for a certain number of weeks, for the period, I think it's 8 weeks. You can only use the loan for certain things in payroll. I'll give you a quick rundown right here. What costs are eligible for payroll? Compensation, salary, wage, commission, similar compensation, payment of cash tips, payment for vacation, parental, family, medical, or sick leave, payment required for the provisions of group health care benefits, payment of any retirement benefits, a couple of other things, right? So as long as you do it for these things, then you're able to get that loan forgiven. It turns into a grant, right? And you can apply to both. And also there's a provision in there. I don't know what the mechanics of it are going to be. I don't know exactly how it's going to work, but you can roll the EIDL into this. So as I said, the PPP is a program that didn't exist 72 hours ago. I was talking to one of my friends in the agency in another office, and we were talking. He was telling me about what's going on with the rules and everything. He goes, it's like they're writing the SOP right now, right? So we don't yet know the little rules and the steps you're going to have to do for everything, but that's in the legislation. So we're going to make up the rules. We're going to write the rules to give this a procedure. The PPP is not a direct loan. It comes through existing SBA lenders that co-ops don't know too much about because until recently you were not even eligible for them. 7A lenders are banks. They do the 7A guaranteed loan from the SBA, where the SBA guarantees a loan, they make the loan. The PPP is going to be done by these same lenders. You apply through them. You will be able to apply starting on Friday. That's the guidance we got, assuming everything is stood up and ready to go.
Right.
That's how that goes.
That's right. And thanks for all of that, David, on the Paycheck Protection program. I'll just have a very quick note from the cooperative specific angle. As David mentioned, things are very fluid right now. And part of the reason that Kate and I are hesitant to talk about specific things about cooperatives is because there's a potential that the eligibility for these two different programs may be different. And because the legislation, does include some slightly different language. I mean, I'll just mention, and this isn't David's bailiwick, but I'll tell you that that NCBA, CLUSA, and others within the cooperative community are working to communicate with SBA and to other policymakers, to Congress right now, to make sure that they understand the importance of the the broadest eligibility possible for cooperatives. But that I think that's even over the next, the next days, we're going to learn a lot more about that. But that's something to watch. NCBA CLUSA will be sharing information as soon as we have it and continuing to work this on exactly how those eligibility for certain co-ops. And there's a potential that certain co-ops will be eligible and others, may not in this first round. So that's obviously we're fighting for all the sectors. But that's the PPP. Much more to come on that in the future. Back to the EIDL, and this is sort of related to that PPP question, but just a real straightforward. What are the parameters for paying off a loan early? Are there early pay penalties for the EIDL? And the answer is no.
No.
Okay.
No.
All right.
Pay it off early if you can.
Okay. Yeah. Always. Yeah. Okay. So the next question here, a little specific, but probably there's a number of the audience would be interested. We're in the middle of a long planned hiring process when this started, when the COVID crisis came upon it, and now we're trying to decide whether to bring on this person. Will a loan approval be affected if we do move ahead with the new hire? If so, positively or negatively?
No, the loan approval is not based on that. It's going to be based on, like I said, the financial performance, right, of the company, of the co-op, the entity for the 12 months before. So it's not affected by that. It's just that for the EIDL. Now, for the PPP, it can get a little tricky because it's designed to keep to pay the salaries of people who you are employing now, or who you rehire quickly, right? If you just laid them off or something, if you rehire them quickly, it's designed to pay their salaries. So if it's somebody brand new who you're bringing on in 2 weeks, I don't yet know what are the technical details of this. That's probably going to be in the SOP that people are writing right now. Right.
Yep. Okay. Good. A short one here, and you may have addressed it, but to bring it up again, is there a max or a cap to the EIDL loan?
$2 million, but not everybody will get it. We're going to do it according to your working capital needs, but the cap is $2 million. Nobody can get more than $2 million.
Very good. Okay. All right.
And the cap on the PPP is $10 million.
Okay. All right. Different caps. Are there a question about 1099 independent contractors? Are there any caveats for co-ops with with no employees, but the work is done by 1099 independent contractors primarily?
For the EIDL, none. You can apply for it. Yeah. Yep. All small businesses, even sole proprietors, can apply for it. Right? Anybody can. Right. Independent contractors themselves can apply for this.
Yeah. Yeah. Which is good. Go ahead.
Right. So you can't use the EIDL to pay the independent contractor, but the independent contractor himself or herself can apply for the EIDL.
Mm-hmm. Mm-hmm. Right. Okay. Yep. Okay. Very good. Pausing on that point about sole proprietorships and contractors, for purchasing co-ops and some other types of co-ops that are actually made up by primarily sole proprietorships. This is also really critical information, that members of their co-ops, like you said, for contractors, but also sole proprietors are eligible for the EIDL. So next question, what if the business had major growth over the last 3 or 4 months? That is, they took on additional staff. Will that factor into the final financial assessment if you're only looking at prior 12 months versus current needs?
Well, the last 4 months are part of the prior 12 months, so that's all going to go into it, and that's going to be visible, right? When they're underwriting and they're looking at it, they're going to go, oh yeah, they had growth. These are their working capital needs. This is what they need. Mm-hmm. The last 4 months are part of the last 12 months. So they're included. They're factored into what the amounts will be. Okay.
All right. Good. Thanks. David, a documentation question. You mentioned the payroll taxes. What other types of documents and proof can be used for working capital categories?
Well, all the financial information, like I said, it's for mortgages. You can use it for for the business's mortgage. The business has a mortgage, right? Some property. You can use it for notes payable. Okay, what are the promissory notes? You can use it for accounts payable. What are the agreements on that? Right? So all of that information is what we use. The tax, there's a release for a tax return. We're going to have to look at the tax returns. Okay. All the financial information. Just think of it like any other loan. Right? Anybody who's going to lend you money is going to ask you everything about your business and show us everything. Okay, have all of it ready to go if it's asked for, because we won't ask for all of it right away. We might ask for all of it.
Okay. All right, great. This next one, there's a term of art I'm not certain of. Is it possible to use an ITIN instead of an Social Security number on the application?
Yes.
Okay. And the answer is yes. Very good. Let's see. Another one about contractors. And that one was answered. This is fantastic, David. And I think we maybe, we've used, almost a whole hour of your time. Let's see. Another startup question. There's been a few of these. This is a slightly different one. We are a startup under construction. We need to maintain our basic operating expenses to ensure that we can open the store in a few months, so they've yet to open. The loan would not be used for other startup costs. We have 2 employees, rent, utilities, very small amount of other expenses month to month. Would this co-op be eligible?
So in the EIDL, they have to be in operation since January 30th, 2020. So if you have some documentation that says you've been operating since then, or before, right? In other words, some sort of agreement. If you have a general contractor building something for you, whatever, and they were doing it in December and all that stuff, right? Anything that proves you guys were operating in some way, or you were beginning operations, if not sales yet, then that's useful.
Okay. Good. This is a question on taxable income. Are the advance and loan amounts received taxable income to the co-op?
Wow, I'm stumped. I don't know. No one's asked that yet.
That's all right.
There's somebody who's very diligent and thinking ahead, and I should have thought of that. I am, you know what? Let's just assume it is. But I don't know. I have to go find out.
Okay. All right. We'll see if we can do a follow-up on that one. Thank you. How many years, a documentation question again, and how many years of sales and cost information is there a rule of thumb that a co-op would need?
For the what we call the first phase, when we just look at it and do the initial calculation of what your working capital needs for 6 months are, that's what we call phase 1, just the financial information in the application. If it's above $300,000, if that calculation tells us you're going to need more than $300,000, then we're going to do the phase 2, which is we're going to ask for more. And think of it like any loan, 3 years. Have 3 years of financial statements ready to go. Income statement, balance sheets.
Okay, good, thanks. This next question deals with the fact that of the turbulent kind of economic cycle that it looks like we may be in, and how some co-ops actually have increased cash flow in the last month, perhaps, but they're starting to see, they're forecasting that they're going to have trouble. So if the cash flow has increased most recently, should they, is it likely that the loan, that they'd be successful in a loan application will affect the amount that they'd be able to receive?
Well, we're going to take it all into account and make an estimate of what you need. So it's not going to count against them if their cash flow increased for some reason, for whatever reason they made more sales. I don't know. I don't know what sort of business would have undergone that. A co-op making masks. I don't know. But
well, there at least was, and I've heard reports that recently has changed the trend, but some of the food co-ops, saw some really robust business as this started, I think it's really varied across the country on how long that lasted. There's a lot of a lot of different factors that have come into play, but that might be one example.
But the increase in the last month or month and a half does not affect the fixed costs that they have anyway. So because the purpose of the loan is to cover those costs so you can stay open, it's not going to affect them. It's not something against them.
Okay. All right. Thank you. Will immigrant-owned businesses be eligible to apply? Immigrant-owned cooperatives be eligible to apply for this, or will they be considered a public charge, or would this be considered a public charge benefit?
No, we've always made the EIDLs available to. There's definitions in the SOP about who's allowed, but think of it generally in this term. If they're lawful residents here, even refugees under some program or whatever, they're eligible for them.
Oh, okay. All right. Very good. If a co-op is denied, can they reapply later? And if, I'll just leave it at that one. Yeah.
Well, if it's denied, then you're going to get a notice. It'll on the old website, it used to tell you on the portal that it was denied when you would log in. And now, I'm not sure if it does that, but definitely you're going to get something in the mail telling you. But you will be able to appeal that and talk to someone and get more information and see if you can get that changed.
Okay. Next question. Is there any type of priority or anything for businesses that are part of an essential business sector? Because there's many co-ops that are part of some of these essential business sectors.
We haven't seen any guidance on that. In other words, that's not part of the legislation. It was never part of the EIDL program beforehand.
Good. Okay. All right. Thank you. Let's see. The online application uses the NAICS code to determine the eligible size for mini co-ops. Is this in the process of being reassessed for COVID-19 specific to EIDL? So I guess the NAICS code applies for EIDLs. Does that look like that's going to be, continue to be the one of the main categorying factors?
Yeah, because it's for small businesses according to SBA small business size standards, and those are by NAICS code. Okay.
All right. I think we're at 5 minutes, so we'll just maybe one or two more, David. You've been so generous with your time, and again, we're going to gather the questions that aren't answered for those cooperatives, and we'll work to get that information either from David or for some others. What if the tax returns, if the 2019 tax returns are an important document, what if they've not yet been filed?
Income statement and balance sheet, and you can use your printout from your accounting program directly.
Okay. All right. And one more question here, and then I want to end, David, talking a little bit about where's the best place for technical assistance, one-on-one technical assistance going forward. But just ask this one more question. What would cause SBA to decline the application? I think you've talked about this, but just to really make it clear, if it's based on pre-COVID cash flow analysis, profitability, or other underwriting criteria, who is refused and on what criteria?
Well, we've already had some loans denied to some people, and these are not for co-ops, for people who applied right away. Almost all of those that I've seen have been, or of the few that I've seen, have been for the credit score of the person who was applying. Like it was a small company, LLC, one person in the LLC, and their personal credit score was just too low. And everybody was really low. Like I said, we don't have a number that we're looking for in the credit score, because the whole point of this is to help this business, and the business could be doing okay as far as cash flow, while the person who started the LLC could have poor credit for whatever reason. So it's not primarily that, but it was so low that we declined it. And you know, there's nothing else we can do about that, right?
Yeah. No. Okay. All right. Well, great. Well, David, we've just a few minutes left, and just talk about technical assistance a little bit. You know, from NCBA CLUSA, we're going to continue to work really hard on the policy side and providing access to people like David at SBA and other places that have kind of this broad general, try to get into some questions. But SBA has a network of people. Can you talk about, David, who people should be reaching out to specifically?
So we have what we call our resource partners. These are the small business development centers, the women's business centers, the veterans business outreach centers, and the SCORE mentors. The largest number are the small business development centers. They've been around as long as the SBA. The women's business centers come next. There's more of them than the next one, which is the veterans business outreach centers. The women's business centers serve everyone, not just women. The veterans business centers are primarily veterans or dependents of veterans, you know, spouses and kids and things like that. So the SCORE mentors are stands for Service Corps Retired Executives. It's retired business owners, some of them retired, in some cases half retired, business owners who volunteer to mentor for free. They do mostly the same sort of thing. To find one, you go to the SBA website, sba.gov, and then look for local assistance. There's going to be a search function, and then you choose you put your zip code, and then you choose the kind that you're looking for. You're looking for a SCORE mentor. You're looking for a small business development center. You choose that from the drop-down box, and you search, and you find one close to your zip code. Call them up, and their whole job is to help people who are starting or growing or expanding small businesses. Now, I know that the ones here in the Washington Metro District area are working a lot with business owners who they've been working with for years, because people often have long-term relationships with a business advisor from a women's business center, for instance. And some of them are brand new. They just called them up because they needed help with all this stuff. And they're doing pretty much this. What they're doing, so for instance, the one in Leesburg, Virginia is doing little webinars for their area, you know, Leesburg. And then the one in Fairfax, Virginia, they're doing their little webinars. They don't have a lot of time for one-on-one right now, but you can get more targeted. Now, in your area, you're probably going to find a WBC or a SBDC or a SCORE mentor who knows something about co-ops. So it'll be even better for you. Because I know that there are SBDCs around the country who have people who work with co-ops.
Yeah, yeah. And let me just add to that. Thanks for all of that. The cooperative development organizations across the country, you know, the Cooperative Works Network and others, I've seen a lot of them quite active in pulling this information, getting, you know, real astute. So that's another place that I'd recommend co-ops if your cooperative development organization in your footprint. You know, they I think are going to be able to probably answer some questions too. So that is all the time we have. Thank you, David Hincapie. Thank you, SBA, for you know, for being there and answering as many questions as possible. We urge cooperatives to apply. To apply for the EIDL if you think it's going to help your co-op. That's why Congress passed it. That's why SBA is there. Hopefully this was real helpful. We have many, many more questions that came through. We're going to work to get some answers to those questions, post them on the COVID-19 website at NCBA CLUSA as soon as possible. This webinar is recorded. It will be posted tomorrow, hopefully maybe even sooner, but I think safely we can say that it will be tomorrow. There, you can see on your screen some screenshots of our COVID-19 website. So with that,
Doug,
yes, David, go ahead.
I just got an email from our public affairs specialist. It says that please let our customers know the SBA disaster customer service number, 800 number, is now open 24/7.
Oh, fantastic. Okay. We will definitely have that number. Go to the SBA site.
I think the wait time, the hold time, is probably going to be very short if you're willing to make that call at 2 in the morning.
Okay. All right. David might, knowing David, he may answer that phone at 2 o'clock in the morning. So again, David, thanks for being so accessible. And everybody, please stay safe and healthy. and continue to do the responsible thing for your different communities. Again, for those on the front lines in our different co-ops, just thank you for everything that you're doing. And NCBA CLUSA will continue to be there for you. Please reach out, let us know how we can be helpful. David, thank you. Kate, helpful. Everybody have a great day.
All right. Bye-bye.
Take care. Bye-bye, everybody.